Hello and welcome guys to the first chart analysis video. I'm going to be having a look at a few stocks that I've seen on the Motley Fool. It's a web page that I generally have a little look at when I want to make some more investments to start off my research pretty much. So they tend to give me pretty good ideas of where to go. So this is what I saw. So this was last updated on the 18th of April 2023, so it's a good while ago. It's about a month ago, so a little a little bit old, but even still, it's a good place to start. So what I'm looking at, as I've said in my previous videos, is that I'm looking for high dividend stocks. So these are three that I've got from the Motley Fool. So the first one's SSE, which is a energy producing company, which is apparently moving on to looking at more renewable energy sources. We've got Barratt Developments, which is a building firm who deal with obviously building houses, etc. And we've got International Distribution Services, also known as Royal Mail, which is something that I didn't know, is that they've actually changed their name or under ownership or something along those lines, basically. But International Distribution Services is Royal Mail, but it's also another firm as well, but which deals with overseas deliveries. So I can't remember what it's called. It is called. Oh Christ! Can't remember. I can't remember. I think it's GMP or something like that. Oh, it's doing me. It's done me. It's well and truly done me. Anyway, I wanted to have a look at these companies because from the Motley Fool, they look pretty good in terms of what they're offering. And then it also gives you inspiration to go, you know what, let's have a look at the charts and let's see what the charts are saying. So SSE, like I said, is an energy producer. They focus on renewable energies, which is also fantastic for the future. They're future-proofing their company, which means that if you invest in them now, if they hold renewable energy as a top priority, then with the laws of the world coming around saying that everyone has to be renewable, then they're sorting themselves out for that pretty much. So they offer a 5.2% dividend yield, which is quite nice. Which the average they say is 3.7% on FTSE 100. So 5.2% is much higher than normal, which is good. So Barratt Developments, they have 8.99% dividend yield. That's as of 2022. It's also a lot higher than the average, which is fantastic. So another thing to have a little look at. You want to buy and hold for, just basically eat up all those dividends. The only trouble with building firms is how the world is working would change how their business operates. So for example, in the current climate, interest rates are soaring, which means that mortgages are much higher, which means that people aren't as inclined to be buying houses and doing what they need to do, and moving on, etc. Everyone's basically battening down the hatches and just trying to survive, really. So no one's really looking for new homes, no one's really trying to push for that. So that obviously decreases the amount of work that Barratt Developments and other building firms have. So in terms of their revenue over the current climate, it's going to be quite low compared to when the world is thriving. So although after all of that, they're not going to go bust. Or from my understanding, they're not going to go bust because there's always going to be work. There's always going to be something that needs doing. And it will all be like that forever. So it's not bad. And again, 8.99% is pretty good. Really, really good. International Distribution Services, GLS, that's what it was called, GLS, which is basically the international delivery service. from Royal Mail. So apparently Royal Mail generates a lion's share of profits from its traditional British marketplace. The company is expanding rapidly through its GLS division, which operates across Europe and North America. So these are the three that I'll be looking at today. I'll be looking on TradingView as per, and I've already, as you can see, I've taken the liberties already of putting a couple of lines on each of the charts. These lines are basically resistance and support lines, and what I mean by that is that as the value of the stock is hanging around an area, the line that's put here is just what I'd imagine the line. It's not necessarily an actual line in the market as where the market sees it. It's just where hypothetically I can see where it looks like there has been either resistance or support in the past. So as you can see, the value of SSE has come up, it's hit this and it's come back down. It's tried it again at this point and it's come back down. It's tried it again and again and again and come back down. So that is a natural resistance line. As it's on the upside of it, it becomes a support, because obviously as a stock you always want it to be performing higher. You always want it to be at a higher value, because then you have more money. So as it's above the line, that line turns into a support rather than a resistance, because it wants to support it going up. When it's below, obviously it's resisting it. It's trying to push it down, hold it down from going to those higher levels. But these are the support and resistance lines that I can see. As you can tell, it's come through this first resistance line. It's pushed through it. It's come back down and turned it into a support line. It's come back up. It's bounced back off it again and up and down and up. And it's managed to push through this resistance line here. It's come back through. It's come back down to test it. So it's just making sure that that is a strong resistance line. So far we don't know yet, because it's only had one challenge. It's come back through, and then by the looks of it, it's starting to come back down. Or at the moment it's wavering at this level. So this isn't necessarily a resistance line to put up just yet, because we haven't got the correct amount of data basically. So it's come back up, and I would be looking for a retest again. Basically, just making sure that it is testing that line and going back up. That's what I see from just chart analysis. So looking at this all together, we know SSE is they produce energy. They're looking at renewable energy sources, which is fantastic. We can have a look. So the great thing with TradingView is you can actually have a look at their financials. So, for example, yesterday, I believe it was, yesterday they had their quarterly or halfly earnings predictions and reveal, basically. So you can see what they estimated, what they reported, and what the surprise was. And that's on their earnings, and also they do an estimate of their revenue as well. But it's also good, you can click on it and you can go right into it and actually find out lots and lots and lots of stuff. One of the things I like to have a look at is their financial health. So you can see total assets, total liabilities, and the total equity. So obviously assets are what they own and what they have in value, such as machinery, vehicles, buildings, land, etc. Liabilities is stuff that they actually have to pay out for, so it's stuff that would be liable to the business, stuff that they have to pay for. And equity is basically how much they own, how much they own on their assets after what they owe, and then that tells you what they're actually worth. So their total equity is what they're actually worth. As you can see, since 2019 to the first half of 2022, what you can actually see that they've had significant growth. It's been very, very healthy for them. So that's really, really good. So you know that they're a strong company, and that shows by when you look at the chart. That actually shows because you can. Oh wow. yeah, it shows because I mean, since 2019 to 2022, there have been an up curve. Look at that. It's very, very strong. But that's not to say that we're to jump straight in and to dive on it and start investing on it, because the reason being is that it's at its all-time high, or very close to its all-time high, and you don't want to buy when it's at its highest point, because you're just going to buy yourself into trouble. Number one rule of buying and selling in the very broad term is you don't want to buy high, you want to buy it cheap, and then you want to sell high. So knowing that it's at its highest point, that's, you know, it's not a good time to buy. Although it is does look like a good stock to invest into. What I would be doing or trying to look for is I'll be waiting for a downturn. If it hits this line again and then retests it and is successful and bounces back up, that could be a potential point to look at. If it breaks through this support and goes down here, then it will look like it will probably come up for a retest again. And if that resistance line holds, then I'll be looking for a next point down here. The diagonal line is also a support or resistance line. The reason for this is that we know that the stock is in a upturn. The stock's going up. You can see from here to here, that's how it's gone. But what we don't want to do, what we don't want to do is lose sight of that, pretty much. So this is basically, as you can see, it's touching here, it's touching here. This seems to have been a nice support line throughout the years. So hopefully, if it does come down here and it breaks through this support line and it comes down here and then tests this support line, then we can have a little look. We can have a little look at buying here to then make some gains from there. Because, like I say, what you don't want to do is buy here, sell here. You've lost 32%. What you want to do is wait till it comes down here, and then as soon as it comes back up, then you know you could have made some money. Alternatively, wait till it comes here, because the other thing as well, which I completely forgot about, is that this is on a very long term. What might be better is looking on the 1 day, looking at more or better analysis, looking at better lines, pretty much. I've zoomed away. I've lost myself. Let's go on to 1 month. Next one we're going to have a look at is BDEV. So BDEV is that Barrett's. It is the building firm, and here's what I've done for it so far. You can see that it's obviously established 1996, coming through. You can see this big drop off, and that's also really interesting to see. Is when you know there's been mishaps in financials in the world previously, then you can sort of hazard a guess why that is. Obviously, that is the 2008 financial crash. That's done that when in 2008 or in the early 2000s, everyone was given mortgages. They were given mortgages, you know, even though they couldn't prove that they could pay them. They was getting mortgages, and so they were buying houses. They realised they couldn't actually afford the houses, and everything was going Pete Tong. So that's what happened there. Obviously, that Barrett's stock was thriving because they was making houses and selling them like it was going out of fashion. And then all of a sudden they stopped, and they said, you know what, we can't actually build any more houses because no one's buying them, because no one has any money to, and also the world's in absolute tatters. So obviously you can see their stock fell quite dramatically. That would have been a beautiful time to buy, but we're not there. So we've just got to wait and see what happens. As of now, you can see there's a big fluctuation here. This is what we call a range. A range is basically an area as to where the stock or whatever it may be can't actually jump out of. So I suppose here would be a good support resistance line. It's just a bit too all over the place to actually put a solid one in. I put one here because you can see it touches there. We've got touches along here, and so this could be more of the range here, really. You can also see that the support line here, that's held quite strong as well in previous years, from 2012 all the way to 2023 most recently. And where it's showing us right now is that it has it's sort of stuck between these two support and resistance lines. With the current climate, and with the way at least the UK government is working, they've just increased I've done it again. There we go. They've just increased interest rates, or recently they've increased interest rates, which obviously is going to put a little bit of a dampener on building firms, and so this is. I can't see it dropping much lower than that unless we have a serious financial situation like in 2008. So I would say that pretty much just keep an eye on it. This one should be another one that would be worth investing in, especially as it's got such a high dividend yield, 8.99%. It's something that I'd definitely be having a look at. It's quite cheap in comparison to where it has been. So if you imagine here, from here to here, that's 78% increase. It's quite a nice one, but on the same time, there to there is 25% loss. If you bought it right now and sold there, then you're 26% loss, and even going down to its lowest point, that's 92% loss. So, but it has only come down here once, and that was at a high financial crisis situation. So, I would probably be looking at waiting until it drops down here. That's bound to happen unless interest rates interest rates drop. The other thing to do is to wait until interest rates drop, and as soon as they do, that's when you can start buying, just to make that extra profit on the upturn of the stock value, as well as reaping in those dividends at the same time. You can see it changes. It can be very quick in the change. So from here, how long was that? It's not long at all, is it? It's about a month or something. 2 months, 3 months, about 4 months there, which is crazy, absolutely crazy. So yeah, it shouldn't take long to see some movement in this, and this could be a pretty. That's definitely one I'm looking out for. Definitely, I might even buy into this sooner rather than later, to be honest. But we'll see. See when I've got some money available. So lastly, we've got international distribution services. This one is all over the place. I mean, it was only established 2014, so it hasn't been trading as long as the others, but you can see some major fluctuations. Obviously, that's a solid resistance line right there. That seems to be a solid support line. It's broken through it a few times, but it's held fast there, and there, gone up for the retest, and finally broken through. I've also put this support line on the bottom, because it's touched here, and again it's touched here, which is currently where it's at. What I'd like to see is, wait, first of all, actually, what is the value of this? What is the dividend yield? I can't remember. Let's have a look. So, bloody hell, dividend yield of 10.15%. That's mad. That's absolute madness. 10.15%. So they're pumping out a 10.15% dividend yield. It's extremely low value in what they have achieved previously. That's not to say that is going to go up, because I have no idea if it is or not. I did see before actually that there were a bit of hoo-ha between Royal Mail and the other firm of them, GLS division, because apparently the GLS division is seriously outperforming. I know it says it here that it takes its lion's share of the profits from the British marketplace, but apparently GLS is seriously outperforming Royal Mail. And so what I don't want to see is, I don't want to see a split and then for GLS to become its own entity, because if that means that they separate from these, then it means that values of the shares will go down. But even still, the potential upturn for this is quite high. It's 200% if it does go all the way back up. That'll probably be, well, I have no idea. But even still, it's very low value for what it has achieved in the past. And it also boasts a really high dividend yield. BDEV and IDS seem to be the ones that, out of the three, that I would look at buying more recent, sooner rather than later, pretty much. SSE just worries me because it's so high value right now that I don't want to buy into that and then for it to suddenly go down in value, because what's the point? But at least with these two, they're both of them are quite low in value in the overall grand scheme of things. But yeah, all three of them look like good little picks. I'm gonna do a video at some point of just like showing the basics of candlesticks, so you can actually join with me and you know what all these mean basically. But not today. I won't do it today because I haven't got time. But I will do it at some point. Let's have a little look at Rio. I am not sure when I bought it. I'm not sure when I bought it, but I know it wasn't up here. I put some lines on Rio, definitely. Let's have a little look at it now, shall we? So I'm going to put a line through here. Put a line through there. So it looks like a very old support line. Look at that. Look at that. Beautiful. Where else can I put one? I can see here looks good. And that also shows on current as well. So generally, when you put in your support and resistance lines, you want to try and capture in as many touches as you can without being biased, without trying to force it. I mean, look at that. You can see it's tested that, it's broken through, it's tested again, it's broken through. It's come up here, tested, it didn't work. It's come up here, it's tested, broken through, come back down, it's tested again, and it's gone up. And then now it's support and support and support. So that's a nice little line. I think, without zooming in completely, up here we've got another support line, resistance line even. So we'll pop that in there. Pop that in like that. I've still got ages and ages and ages of learning yet before I figure out how to do trading view as well as so many other people I've seen. But yes, Rio Tinto. As you know, I've already got 100 quid's worth of Rio Tinto. All right, well, that's a quick look at these three stocks: SSE, BDEV, IDS. My final thoughts on these. SSE is good company and good stock to invest into. Potentially you need to wait for some sort of drawback before you can purchase, just to make sure that you aren't going to lose out on profits just because of buying at the wrong time. But sounds like a solid company and they've got good prospects for the future. BDEV, again, another company which seems pretty strong. Just need to keep an eye on interest rates, because interest rates will advise on how much work they will be doing when interest rates inevitably drop. then that should be a good time for builders to start going mad and making stuff again. So that'd be a good time to buy. If not, if they don't drop, then it gives you a better chance for their stock to go down for you to buy at a better price. So again, that might be a good one too. That would be a good buy, but I need to wait for a good timing basically. And international distribution services, i.e. the Royal Mail, i.e. GMS, if I get it right, GLS. GLS, again, Royal Mail, been around for a long time. International distribution services hasn't been around for a long time, but it has a historical company within it, and also by the sounds of it with GLS, it sounds like they've got quite a successful company within it also. Very cheap at the moment, pays a very high dividend, could be worth a good buy, but at the same time just need to be careful that profits don't go through the floor. So three good stocks, a little bit of info. Remember, do your homework. Don't listen to me and go, yes, this guy knows what he's talking about, because I certainly don't. I am just telling you what I see, and I could very well be wrong. So take it with a pinch of salt. But for now, bye.